Hey guys, good morning. I have good news and bad news. The good news is that the spreads were intact Friday, giving a little bit of hope for a Santa rally. But the bad news is the JP Morgan caller came in and that is adjusted once a quarter, and it pretty much encapsulates the market between a put, they sell a put and a call to make the market delta neutral between two positions. And then if it breaks the put, they sell a second put below it so that they are making money going from their lowest put to the bottom put, or the lower put to the bottom put. So if it breaks the bottom number, it will go to the lowest number and make money fast. But here are the levels. They ended up being a call at 38.35. They sold a call, and then they sold a put at 33.90, and then they sold another put below that at 28.60. So here is the mean for the contract, for the new quarterly contract for December, S&P 500, December 16th, using Black-Scholes. Um, the mean for the contract is at 3600, which is and this is the PT1 indicator, or the PT3 indicator um, on the chart, and then these are the JP Morgan color in the yellow, and the pink is the 3600 mean for the quarterly contract. So the mean for the contract is right on my PT1, what I call PT1, which is 123. So my quarterly distribution for the first standard deviation is exactly where the market said it should be for the mean of that contract. I hope you are seeing this. And this, you know, again, I'm just showing you guys that these levels are pretty close to being where the institutions are coming into the market and realizing what these levels are and what they mean. Um, I calculate the quarterly two different ways. I use a month three, which is the standard way, but then I add a week 12. Actually, I have one on these twice. So there's a close and there's a week 12 close. There's a month 3 open. There's a week 12 open. And this is the volatility down here. Okay. Volatility got close to 100, the maximum for this market, which is another metric that if it hits 100, often the volatility will start collapsing again. So I would imagine next week that we see that melt up to approach their call, uh, approach the two going from 3600 up. There is a put wall. There was a giant put wall at 3600, and that was there because of this first standard deviation of the quarterly, and also because it was the 3600 number. But it was especially strong. It held the market despite the market really, 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 really trying to break it. And I had every confidence in the world that it would hold because of that reason. There's not only the volume that we see associated inside of our platforms, defined volume, um, a lot of this volume is hidden from us. We can't see the order flow because there are block trades. Like the central bank will actually come in and put a put wall up where they don't want market to go down any further. I think it's wise and prudent to do so. You don't want the market to be just thrown into the abyss for no reason and wreck our markets. Our institutions our pension funds, our profit sharing funds, they rely on these spreads being maintained. And when we can understand the term structure, do you see how flat that is going into the month of October? There's no fear or panic in this market at all. That is just going to be a little bit of an elevated volatility, but flat. Um, you can come check your volume over here to see where the heavy put volume is. 36,900 and 36,000. So there is what the market considers to be the put wall. 36.9 and 3600. So anything above 36.9, very, very, very bullish. So we'll probably go up and test 36.9 and then come back down. Um, but I was very disappointed to see, I guess they have to put the collar up. But they're expecting 2018 all over. They really are expecting this to go down through December. And we will find ourselves in a situation where right after Christmas or the first of the year, market will pop back up because they'll be saying the Fed's done tightening, or yeah, they won't raise or tighten, something like that. But anyway, we don't know what's going to happen. But I'm just saying my guess is that despite what I would like to see, which is the market to bounce back up or stay flat, it might meander down dramatically going into year end. Whether the Fed holds up the three, I don't think they care about JP Morgan's uh, PT2, but they better care about that PT3. And if you're a Federal Reserve chairman watching this, that would be 3261.90, just in case you were wondering. So 3250 needs to be the put wall, please, to hold the market up so they don't float down into this unnecessary wing for Christmas. That would be disastrous. That would be disastrous. And so, yeah, I just wanted to show you that these levels are very, very solid. They match the JP Morgan collar perfectly. And again, these PT levels can be put on different time frames. That was quarterly. Here's a monthly where I can do a 4 week and a 5 day or 7 day, however you would like to do it. Um, so I do a monthly and a 4 week, and then on my daily or my weekly, I do the 5 day. I can if I want. These are just weeklies. So you can put any distribution on your chart that you want, but the overall premise, if it's not an OPEX or a VIXpiration breakout like we had there, you're going to see that the market stays inside the range. Pretty standard operating procedure because and close back inside if it does breach it briefly so that the institutions keep their spreads. So as long as we know where these levels are on an intraday basis, it helps plan our spreads and gives us some great, um, what do you call the outliers to come in and reverse it back to the middle whenever we can find it, approaching the three up or down, then we know that there's a chance that it could change. This was the expiration, all that. But from the smallest of the range, the Globex, to your weekly, daily, um, to the monthly and the quarterly, the ranges are all the same. The historic volatility and the bell curve works the same. And the pricing sheet demonstrates that they are not using arbitrary canned delta numbers like the retail traders are using. They're using the historical volatility, and they're moving it. They don't put it right on the line, they move it just a smidge above and below. Okay, so you can get Jats PT indicator for NinjaTrader. If you don't have NinjaTrader and would like to see these levels, I post them in the PT Twitter. So you can do the Jats PT indicator for NinjaTrader. There's a sale going on today, a flash sale. So you can pick it up one last day for a reduced price by about $1,100, and it'll go back up to $2,600. I'm even thinking about doing a price increase after that. Um, and if or you can subscribe to the Jats Twitter, and I post levels for many different markets, giving you the spread numbers and post charts periodically. So I think I'm posting energy, equities, and agriculture right now. But if you would like gold or fixed income, I can do that also. Just depends on what you guys like to trade. All right. So take advantage of the sale, and we'll talk to you soon. Thank you so much. Y'all have a great weekend.